So some have asked me to give them a little tour of my Wall Street days, which was from the mid-90s to 2009, and I'm going to do that today. So I came out of this stop, Wall Street, the 2 and 3. I live on the Upper West Side, so the 2 and 3 actually stops right there. Now I'm not going to go in chronological order because I worked in a few different places and they're a little bit far apart, but I'm going to go to the one that's closest to here first, and I'll give the dates so you'll get a perspective. So I'm going to walk down this block, and this was the block that I walked down. This particular office was 1990, tail end of 1997, and until April of 1999. So yeah, so I walked down this block, and I'll show you the building that I worked in, and I'll give you some backstory. Some of it's pretty funny actually. So here's one place I worked at 100 Wall Street, and wow, a lot has changed. I haven't been down here since, I mean, I've been to Wall Street obviously since then, but I haven't been to this building since I worked here. And wow, the lobby is completely different. I mean, it was like pretty much a shithole when I was there, man. And this was a place where I actually met Kramer. I don't know if you know him from CNBC. He's the stock guy. I don't know if his office was here, but a couple of times I've seen him come in here. So this is where I had the most interesting experiences. Now, most people, you know, start out in stocks, right? You know, but I started out in commodities. So I was used to the risk. Commodity futures, forex is a very risky investment class. So, you know, stocks were like child's play. So I remember being one of 3 senior traders here I even forgot what floor it was. God damn, that was a long time ago. So I was one of three senior traders. We all were trading commodities. We didn't touch stocks. There was a department that touched, you know, stocks and equities. They were on the other side of the floor because you couldn't mix them at the time because there was different licensing and all that stuff. So I remember working with these 2 other people. They were fucked up, man. I would wake up in the morning, you know, they would like be snorting lines of coke. They would be like drinking and stuff. And I didn't do any of that, but I was fucked up in my own way. I was sort of into bodybuilding back then. And so I took something called an ECA stack every day, which was ephedrine, caffeine, and aspirin. And so I was fucked up too. I mean, I was speedy. It's pretty much the same thing. And then they outlawed ephedrine and whatever. But we were like the oddest people because I wasn't like them exactly. They were a little bit more risky, but they were also older than me. So there was this one guy. I'm not going to give you his real name, but he had a name that was sort of unisex, but the name was, you usually find more women named with it, you know, so I'm going to come up with another name that is similar in that way. Is Leslie. That's not his name, but he had another name. So he has some interesting stories. First of all, he sounded like this. Hey, how you doing? He sounded like CC DeVille from Poison. So, yeah. So he used to get into like all these bar fights, shit, and all sorts of shit after work. And so he would come in the morning, right? He would have like this, not just like a shiner. I mean, his whole fucking face was like black and blue, right? And he was this sort of tall, he was probably about 6'5", really lanky guy. And So he used to come in and he used to brag about how he beat the shit out of all these guys, and clearly I don't believe it. But he used to say something really funny. He was like, "Never fuck with a guy named Leslie." And Leslie wasn't his name, but it was another name. But and everyone would laugh, and I think part of it was that, you know, he got the shit kicked out of him, and you know, he wanted to save face, but he sounded like this, and you know how he would talk. He would say, "I says" to the guy. "I says." He says, "I says," which is very interesting. The other guy, the other trader that I worked with, again, I'm not going to give you his real name, but anyway, he was like the worst trader ever. Okay, worst. I mean, you couldn't get worse than him. Everything that he bought would go down. Everything that he sold would go up. And that was hilarious. So every time he would trade, right? Every time, he would say, "Hey, I just bought XYZ of something. Sell it, because I'm the fucking kiss of death." And that was hilarious, because you know what? He was like a fucking oracle, right? So every time he bought stuff, we would like sell it. We would sell it. So when he bought it, we sold it, because it was like a sure thing. No one could be 100% wrong on the market except for him. So that was hilarious. Okay, one of the most hilarious things. But I mean, it was such a weird time, because we were all hopped up on something, right? So I was on ephedrine, caffeine, and aspirin. So I was high most of the day, and they were like, you know, coke heads and whatever. But I never tried that stuff. I'm afraid of that. But we were all like jumpy, you know. we were all fucking jumpy, you know. So it was like we're buying and selling, and it's like, oh fuck, you know. So when like coffee would go up, you know, or orange juice would go up, we would be like, buy. And it was just a fucking nightmare, because we would be like, you know, just like at each other's throats too. It's like we would be fighting each other. It was like, who's right, who's wrong, you know. So it was just a weird time. But I gained a reputation in previous jobs. Like I said, this is not going to be in chronological order. That I was an expert trader in sugar, the sugar market. So I was called the sugar man for you know, and through all these firms, because it's such a small group of people. Commodity markets are so small, but we are the most risk takers. Like the stock people, they had nothing on the commodity people, because the stock traders, you know, they were like, oh yeah, you know, we 3x'd our investment, or 3 times our investment, and we're like, oh, yeah, you know, that's really quaint. We just 20x'd our investment in an hour. Okay, but we also took a lot of risk. So we were a little bit cocky. But interestingly enough, when it came down to it, we actually took a lot less risk than the stock people did, even though commodities is a very risky business. And that's why, for me, you know, cryptocurrencies is perfect, because it's actually in many ways better, because with cryptocurrencies, at least you can trade 24 hours. You can get in and out at any time, whereas with commodities, you can't. It closes. And so if you were, you know, shit out of luck in a particular trade, you have to wait until the next trading session. And if that market goes against you really hard, there's nothing, you can't get out, especially if it goes what they call limit against you. And whereas with cryptocurrencies, that doesn't happen. There is no limit up. You can get in at any time, get out at any time, especially if you're trading through an exchange. So, I mean, these were like really interesting times for me here. I remember before, when I first started, I actually went to this building here, 101 Wall, to apply for a job. Like I said, I'm out of chronology here. And they wanted me like to cold call and stuff, and I you know, that's not my thing. I'm not a little bit too reserved for that, too introverted for that. So I never took it. But when I found a position that would allow me to teach and trade, like foreign exchange, commodity futures, which was my passion, which was my love, I took it. So I didn't have to become a broker. I mean, I had to get the licensing for being a commodity broker, but I wasn't really a broker. I was a trader and an educator, and that was one of my first jobs. And it was during the time when foreign exchange trading in the mid 90s was a new thing for retail investors, for everyday investors, and it was not regulated back then. So it was a free-for-all. So I ended up in this one company, which turned out to be really messed up. But I have a video about that building too. And like I said, I'm going out of order here, but I'll reference the dates when I finish all this. See you then. So the very first Wall Street job I ever had was in this building here. And in this building is where we had commodity futures, we had foreign exchange trading. And I was the trainer and the head trader for the commodities unit, but I trained the Forex and the commodities unit. And man, they were fucked up. I mean, they were taking people off the street. I mean, they wanted to train all of these brokers, right? And I was like, these people have like no financial background. You know, what do you think they're going to be doing? You know, and they said, look, we don't want them to trade. We just want them to sell. That's all they said. They said, we don't want them to trade. We just want them to sell. Which means back then it was cold calling, right? There was no internet. The internet wasn't very strong back then. I mean, it was there, obviously, but it wasn't yet part of the financial system in any major way. So I was like, all right, well, I'm not a sales trainer, so I'm not going to teach them how to sell because I don't know how to fucking sell myself. You know what I mean? I just know how these markets work. I trade it. I know it. I understand it. But back then I didn't have a lot of capital, so I couldn't really trade on my own too much. But so anyway, I taught these people about, you know, the ins and outs of buying commodities, about buying foreign exchange, about options, call options, put options, and I even had like an interesting way to teach options. Options are actually a little bit more difficult. One day maybe I'll put out something on that. But yeah, so this was the first place, and it turned out I got a bad vibe about the place. I really did. I mean, this is where sometimes, you know, your occult training kicks in, you know. And I just had this really bad vibe. I was like, you know, something's fucking wrong with this place. You know, you never saw the owner. The owner was like, you know, running back and forth between like Russia and the United States. I mean, it was just something was wrong. So I left, bolted, because, you know, I didn't have a client list. I was a trader and an educator, so I didn't have, like, you know, I didn't steal business from them, but they needed me, you know, because they needed me to train the people. But I left. In the next video, I'll show you where I went to initially after this one, and they were pissed off. These guys were threatening to break my legs. They were threatening to hurt my sibling. I mean, it was just empty threats, but they were pissed because they didn't see it coming. And I mean, it's a dirty business. I mean, it's a dirty business. Now, actually, there's more regulation. You know, and by the way, most of those guys who own that firm, they ended up being convicted felons, and they can never participate in the markets again. Man, did I dodge a bullet on that one. But yeah, so Yeah, so this is one of them, 61 Broadway. Amazing. Next video, I'll show you the place that I went to after this one. So anyway, this is the place that I moved to after I left that shit show of the Forex and Commodities. I mean, I moved to another commodity place, but they hired me to trade the sugar markets. And the reason why is because I was an expert sugar trader. I know it sounds weird, but that's why they call me the sugar man, right? So why, what did I have that made them want to take me on? Was the fact that I noticed a discrepancy in the sugar market. And now that discrepancy does not exist anymore because now everything is automated. But back then, everything was sort of manual. You had traders on the floor of the Chicago Board of Trade. Well, sugar is traded here in New York, but they had traders that were inputting trades manually. So what I did is I was essentially responsible for all the trades that took place at the New York commodity markets. Not so much like oil, because oil is traded here too, but more like sugar, coffee, cocoa, those types of markets, right? So what was this discrepancy? It was quite simple, and I didn't tell anyone the discrepancy until I went to the firm that I covered earlier, the 100 Wall Street. What I noticed about sugar was that, let's just say it traded at 8 cents, which it did at the time. All of a sudden, the price would go to 8.10 cents. So 8.10 cents. And then all of a sudden, it would revert to 8.01 cent. Now, it went from 8.10 to 8.01. So the exchange would call back and say, listen, we canceled all the trades above 8.01 because it was what they called a key punch error. What is a key punch error? A key punch error is when a trader on the floor makes a mistake in the input of the price. So if the actual price was 8.01 cents, they mistakenly put it at 8.10. Now, on the surface, this happened fairly often, and trades were canceled. No one lost money, no one gained money. But here was the interesting thing. And this is clearly, I was the only one who figured it out. I don't know how, but that's because no one's paying attention. Is that at the end of the day, sugar would end up at the key punch error. So if all of a sudden the key punch error was 8.10 and then reverted to 8.01, at the end of the day, sugar would close at 8.10. And it did this 8 out of 10 times. So that led me to believe that maybe these floor traders are trying to tell someone something, saying, look, all these orders are coming in. We're going to end up higher on the day or lower on the day, buy or sell. And of course, I don't have any proof of that, but it just seemed, odd that the key punch error would always be the closing price or close to it. And so I was making all these trades and like, how do you do it? And it wasn't just 1 or 2 contracts. I was trading 1 to 5% of the total sugar market volume on any given day. So I could move the market myself. But the thing, it didn't have a very high volume, so 1 to 5% wasn't that hard to achieve. Now the volume is much higher. So, but still, But I wouldn't go in just at, all at once. I would wait for the key punch error and then jump in, but I would slowly get in because you don't want to move the market because that attracts attention, right? So I'd sort of trickled in. So I would buy, all right, a few hundred contracts, and then it would go in, and not enough to move the market in one shot. But all of a sudden, these markets would end up at that price, and that would be the price that I would get out. And they were like in awe of it. They were like, wow, I mean, how do you do this? So they called me the Sugar Man. And that became my name throughout the commodities world here in New York. And what's funny about that is that it's such a tight-knit community. So wherever I went, I knew someone who knew someone who, or I worked with them at some point. And it was just weird. It was just a very incestuous bunch. It was just a weird thing. So it was a very tight-knit community. And so you knew everyone. Wherever you went, didn't matter. So, wow, this area is a lot noisier than I remember it. We'll now show you, I'm going to walk to where I worked with Merrill Lynch in the 2000s. All these so far that I've covered were in the 90s. I'm going to show you the Merrill Lynch, and then finally, at the end of my corporate trading positions at Bank of America. See you then. Okay, so here's the building that I worked when I worked at Merrill Lynch as trading compliance. So I wasn't actively trading, but I was monitoring other people's trades to make sure that they weren't doing insider trading or anything like that. And this was in many ways a more mature job. There wasn't, I didn't have to deal with, people like Leslie and the guy who always was on the wrong side of the market, This was where I was dealing with real professionals, people who have been in this for decades, and I sort of had to monitor them to make sure that they didn't trade in either stocks or commodities or what they called swaps, that they were themselves part of. They were part of the group that negotiated these investments, right? So you can't buy or sell an investment that you are part of creating, so that's insider trading. So, and let me just tell you this, the laws for insider trading are so harsh here, you can't get away with it. So, I'm sure some people do. But, yeah, so I was responsible to monitor these trades, and then if I ever flagged any trades, I would send it to these 3 lawyers that I worked with. So that was interesting. And it was different. It was different. It was a lot lower energy. I didn't need to do any type of trading. I just needed to monitor other people's trading. And the thing is that it was always a day behind, and sometimes a week behind. So I could come in, like at 5:30 in the morning, analyze all the trades from the previous week. And if I was done, whenever I was done, they would let me go. So, some days I'd come in at 5:30 because I'm a morning person, and I would leave like at 12 o'clock, or 1 o'clock, and I would just go home, So Merrill Lynch was great. And then I was here obviously during the financial crisis, when all of a sudden all of these bonds and these mortgages were going to hell, and Merrill Lynch had I actually worked in the department adjacent to the mortgage department, but not the mortgage underwriting, but the ones who packaged all these mortgages and created what they called CDOs, debt instruments and stuff. So I would hear them doing all their deals, you know, but you know, it didn't mean anything to me because I wasn't part of that system. But all of a sudden, when the shit hit the fan, and then all of a sudden Bear Stearns was defaulting in some of their investment funds, it trickled down, and Merrill Lynch was enmeshed in this whole global issue. And God, to be in that department, because man, they became pariahs. They became pariahs. I was just compliance. I was trade compliance. I didn't have to worry about anything, but it did affect me. And so Merrill Lynch was about to close. We had Lehman Brothers and Bear Stearns, clearly. So Bank of America swooped in, bought Merrill Lynch, and at the time Merrill Lynch was run by John Thane, who was actually a really good guy. He was a little bit stiff, but he was good. He was a good guy. He was sensitive. He knew what he was doing, but this was too big for him. It was just too big for everyone. And so Bank of America, I remember, I mean, seeing him when he talked about the Bank of America purchase, he was like crying. I mean, on the verge of crying. So Bank of America bought Merrill Lynch, and then we moved to the 42nd Street building, which will be the next video, which is a great building, but that was really the beginning and the end for me in Wall Street, as corporate Wall Street, and I decided from then to just go on my own. So I'll cover that in the next video. And when Merrill Lynch was taken over by Bank of America, this was my last office here. After this job, I never returned to corporate America. And wow, it brings me back. I left in 2009, and this is on 42nd Street. And this is actually one of the more ecologically friendly buildings in New York, I think even in America. But yeah, this was my last corporate job in finance. And wow, really great memories, but at the same time I knew it was the end of an era, and I knew I never wanted to go back to work for someone else. And wow, I don't regret a single moment of it. Oh, I wanted to mention one more thing. One of the upper levels, there was this trading room with people that are called quants. They're essentially computer analysts, scientists, and mathematicians that trade algorithmically. And let me tell you, each one of them had like 7 screens, and they were like 12 years old. I mean, these people to be, 18, 20 years old, but they were making an unbelievable amount of money for this company, and may have also been one of the reasons why the mortgage crisis even occurred. But that's the end of these videos.